Hello, traders. Hope you guys are having a great holiday weekend. So, for this chart of the week, I thought we'd do an overview of the FANG stocks and some other institutional favorites and start with a broader market view, looking at our market internal gauges here. So, we look at our market internal gauges not every day because they typically don't move all that quickly, but definitely on a weekly basis and share that information with our advisory letter. And so we got a risk off signal. You can see right here where these put call ratios, they're moving averages of the total and the equity put call ratio. And so these bands are envelopes that I created many, many years ago to adjust with bull and bear markets. And this down here is a McClellan oscillator, as it's called, readily available on many websites for free, something I've used for many years. And I'll just explain this quickly. All this is pretty simple stuff, but pretty smart, and it works as a good breadth gauge over the years. Looking at the stocks, the number of stocks advancing minus declining on a day-to-day basis. You take that raw number, apply a 19 and a 39 period exponential period moving average to that raw number, and it plots this line, which is the difference between those two moving averages. Similar to a MACD indicator, where you're looking at the 12 and the 26, the difference between the moving averages. That's all this is. So if it's above 0, the 19 is above the 39. If it's below 0, the 19 is below the 39. It's sort of a moving average crossover with a breadth internal gauge. And we're not too interested really in the way it's trending. I'm interested if it stays high and goes sideways up there. I'm interested if it's above or below 0, but primarily interested if it's at an extreme, down below minus 200 area, give or take, or up above in that area between 1 and 200. However, in of by itself, it doesn't really tell you a heck of a lot. And I've looked at many internal market gauges over the years and narrowed them down to this simple screen. So when we have the put call ratios into the upper bands and the breadth gauge at an extreme, it's risk off time, meaning you've got too many option traders buying calls versus puts, and breadth has reached an extreme as well. The combination of two has served extremely well over decades as a indication of risk off or risk on. If this is dipped down below 1 to 200, and these moving averages are down below the bottom bands, together we then know that if we do get a chart set up where it's a long setup, odds are it's going to work. Whereas right now, we have a long setup here on the S&P 500. And it's moved up, it's pulled back to the flat 200 MA, the rising 20. It hasn't traded above a prior bar's high yet, but if it does, historically, it's less likely to work out with a move to and certainly above the prior high. Whereas if this was to come down in between this area here, between 5,700 and 5,600, closer to the 50 MA, this price support, it's likely that these would begin to line up or would be lined up at a bullish extreme, and that buy setup would align nicely with the internals, and it would be highly likely that it would work and possibly push up above the prior highs. As always, we have to see the setup that sets up what it looks like. It could have a breakdown failure. It could have a bottoming tail bar. It could have a bullish 180. It could have a W pattern. Endless numbers of combinations. So we just have to see how that sets up and the location where it sets up. These whole numbers in the S&P 500 tend to be good reference points as well, where there's a lot of volume and open interest at those levels. Currently, there's the majority of open interest at 5,700, which aligns with this minor support level. So a test of there should happen this week, should provide some stabilization. We'll see how that goes. Now, looking at our FANG stocks and some of these others down here, We see Apple has been underperforming tremendously. Typically, it doesn't. Something's changed. It's in Trump's crosshairs with bringing iPhones to the U.S. to manufacture them there. They say they're not doing it. We'll see. Right now, it's down on this area of these pivot lows where buyers should step in, and we'll see if they do. It closed under 200 on Friday. It gapped down. Most times, several days down and a gap down into support, there's going to be buyers there. There were on Friday, like there was in many things, but it didn't hold on to the gain, and we'll see what happens after the holiday weekend. Microsoft led the way up. You remember this was the earnings report. It gapped up tremendously, and it kept going. And notice the little breakout bar failure. When our internals reach extremes, not everything turns at the same time, and rarely do the longs turn immediately when we get that signal. But we say accidents begin to happen. What's an accident? Breakout failures. Patterns that are in uptrends begin failing. Here we see close under prior bar's lows. So it's beginning to pull back. No real significant damage done. But our internals tell us odds of buying breakouts, especially in something that is short-term extended, is less likely to work. Buying call options is less likely to work. However, with a breakout failure and a break under these lows, selling a bear call credit spread for on a short-term basis is likely to work. So different patterns, different vehicles that we can utilize to profit from. Now, considering this an uptrend, it's an institutional favorite right now. It may not go down very much. So we don't want to short a stock like this. You could intraday, of course, but from a swing trading basis, that would be a no-no. NVIDIA is going to report earnings on Wednesday. Notice the breakout failure that occurred, this topping tail. That was a big green bar before it completed itself, and there was news on that day. I can't remember what it was. Probably something to do with tariffs. And came back down again. So it took out the highs, was a big green bar. It turned into a topping tail, wide range topping tail bar. And one of the lessons we always tell students and those in the green room, many times subscribers will say, what do you think of XYZ? And it'll be 12 o'clock. Maybe this was at 12 o'clock. I don't remember the time. In any event, we always say, you know what? It looks great, but it's only 12 o'clock or 1 o'clock. Let's see what it looks like at 3:30, because if it's after 3:30 and it's still hanging up there, odds are it's going to stay up there. But we don't take trades based on incomplete patterns and incomplete bars. So NVIDIA earnings on Wednesday, maybe it'll come down into that point, and we'll see what the earnings are. Amazon, that gapped up. It's been correcting for a while. Little relative weakness versus Microsoft, but it's leading the way down versus Microsoft. Coming down into a support area is where buyers are going to show up. And in that area down here, maybe it gets down below that, we get a turn. We look for bull put credit spreads with the appropriate patterns. Eventually it sets up a long. We look for longs there. Google, that had positive news and it backed off. Of course, the internals being what they are, it's not that unlikely, but it's got a big bottoming pattern, which we like. A big, dip down, and it came back up again. Looks like it can go higher. We'll see where it stabilizes. Meta underperformed, but another bottoming pattern. You see, things came down a whole heck of a lot. They bottomed, remember, on the Liberation Day, and things cratered, and then Trump came out with, maybe not such a Liberation Day. Anyway, you know what he said. And now it's pulling back, moved down on Friday. There was the news 50% tariff warning, right, from Trump on the EU, and then the Apple news. So this is coming down. There's an unfilled gap down here, coming down maybe to 600. The whole number where the 200 is and the 50 would be a great spot to maybe buy some of this or put credit spreads, ideally. Right? Whole number, support, moving averages. We get the appropriate pattern. Look for take advantage. Right? Tesla, another big bottoming pattern. Right? As you know, that came down a lot and moved down, up, down, right? Higher, low, bullish price action here. The spike up so far holding up quite well, going sideways above what we call the void, and we'll see how this holds up the rest of this week, or if it possibly could break out. But notice the little breakout failure right there. Netflix has just been a monster. It's strong. It looked like it was going to pull back. Got that red bar next to this prior high. It broke the low. Some support, nothing of significance, and ripped right back up again. But another little breakout failure that occurred last week. Looks like it'll pull back. In addition, momentum is slowing down. Right? So strong momentum, pullback, and now the distance to a bearish bar, the distance between those highs is closer together. So momentum is slowing. We don't need indicators to read divergences. We just read the price action. Broadcom is a leading semiconductor, is holding up great, but we've got another little breakout failure, and we've got the support area there. Does it keep going sideways? Does it pull back? And it's a semiconductor stock. All of these patterns, right? Maybe not so much Apple, but all of these patterns suggest buyers are going to step up at somewhere on a pullback. Now, that assumes the pullback doesn't get out of hand because of some news, but all we have is the past and the moment to see what's going on, right, to form a bias. Costco, uptrend, it dipped down, right? The red bar, it broke some support, it came back up again. However, like the others, momentum is waning. So we'll see how much this pulls back or the lack thereof. Walmart, a main retailer, discounter, it's been doing well. There was news they're going to raise prices based on tariffs. I think it was this down day there. It popped back up again. So this is forming a trading range. We've got a pivot low. We've got pivot highs. So far, it's in a trading range in an area of resistance over here. Really not a big deal. And I said most things are correcting based on where the internals reached. And we're observing to see how far they correct and what shows relative strength and weakness. And JP Morgan, right? Leading financial stock company. Bottoming action, same story. The big correction, the Liberation Day, the back off, the resumption, the upward move. Prices are correcting from when the internals reached an extreme. This is pulled back. It's got the best looking turn chart stabilization in the area of the unfilled gap already at the rising 20, gap down reversal, a wider bar. So when we look at reversals, say Meta, it's a green bar, but a topping tail. Here we've got a wider bar that closed almost near the high. So looking much better than the others. Overall, things look okay. We're going to watch to see when our internals reached a bullish extreme, what these patterns look like. Of course, what happens on the NVIDIA earnings. CRM is also reporting on Wednesday after the close, so that'll be in focus. And this is what we call a factory work. And so we apply this type of analysis to any stock or any instrument, whether it's Bitcoin, whether it's Tesla, whether it's Apple. Everything is utilized or analyzed, I should say, in exactly the same way. As always, questions, email us, Greg and Dan at Master Trader.